Hello, it's Tuesday the 27th, I'm FX Blue, and this is the market brief. So it looks like many forecasters underestimated the pace of the UK recovery. Economic fundamentals have turned positive and the leading indicators are improving every month. Yes, Q1 GDP growth won't be anything to write home about, but estimates for 2021 continue to increase as data suggests we lowballed the pent-up demand and indeed underestimated how eager the country is to return to normal. If we roll the clock back 18 months, who would have thought the UK would be growing faster than Germany, where forecasts for GDP growth are only about 3.5%? Not me, that's for sure. But with the foundations where we have agreement over the Northern Ireland Protocol, the Bank of England is backing a solid recovery, and of course the vaccination programme is going from strength to strength, it does look rather like the UK has stolen a march on its global competitors. Sterling, meanwhile, remains a little conflicted in the market by a number of different drivers. Gone are the days of strong economy, strong currency, where several elements are now competing for market attention. This is limiting highs against the dollar, and market sentiment is tipping a little more against a break over the 140 level. We saw a high of 139.30 yesterday before a little profit taking pulled things back to close around the 139 level. Over in the US, durable goods orders is a data point that values big ticket items like ships or aeroplanes. Whilst it can be pretty unpredictable, the order book from larger industry is a key leading indicator of the future strength of the economy. Look at Boeing, for example, and consider how big their whole supply chain is that would be needed to fulfill their billion-dollar orders. It gives a good idea of the potential impact. Potential or not. Orders only rose by 0.5% in March, well below the 2.5% forecast, and naturally this has raised questions about the medium-term strength of the US recovery. FOMC members will have noted this ahead of their meeting today, but we still don't expect any interest rate change or change to the bond buying programme. Instead, we'll be looking for clues in any comments and hoping for a little more forward guidance at Powell's press conference tomorrow. The euro strength has been rather manufactured by the US currently, but it has allowed the ECB to worry less about their current levels of inflation. Indeed, euro dollar kicked on again yesterday and we touched a new high of 121.15. We pulled back a little to close just under 121 and we opened this morning around 120.65. Right, that's it from me. Have a good day. Do join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.